In the previous video, we discussed the possibility of Ethereum reaching all-time highs, possibly reaching the 5-digit levels, or possibly going back to the 3-digit levels around $700. Now, that is a very hard decision to make in this current time, especially with Bitcoin making a very indecisive move for its overall macro trend. But in this video, we're going to be talking about the medium time frames and how we can separate the internal degrees as best as we can to create a higher probability of which one that we might be choosing in terms of the route to the upside or to the downside. Welcome back to the XForceGlobal channel, ladies and gentlemen. Thank you very much for joining me here today. In this video, we're going to be discussing Ethereum's price action. So if you would like more videos like Ethereum and Bitcoin, please make sure to hit that like button, subscribe to the channel if you haven't already. Thank you very much. Now, right now, as we have discussed in the previous video, we talked about this possibly being a wave W, X, and Y. Now, I don't believe that we are in some kind of nested 1-2 structure, meaning that we may be creating a series of impulses to the upside, where we may be working for a larger extended wave 3 to the upside. I do think that the overall picture right now is that due to the lot of structural overlaps that we have, we may be in a corrective structure, even though that we may be working for one more move to the upside. Now, that isn't to be a big concern for everyone because it still brings us to very handsome reward targets. Like I said, it could possibly reach up to the 5-digit levels. In order to achieve that, in my opinion, is that we're going to be separating the degrees as threes and focusing on just the threes, treating everything as a corrective move, meaning that we're not seeing this as a 5-wave move of any sort. Rather, we're working in what could be a larger distribution pattern, but there still could be swing trade opportunities in between. So starting off with the first scenario that we discussed as well, which is the WXY, this whole move is deemed as a double zigzag within a larger ABC flat. So we're going to be focusing on this move here because that is the missing leg or the partner leg that we're going to be looking for against this wave W. Now, this range here is arguably considered to many, even the general market participant who isn't versed in the Elliott Wave Theory, as a possible range. We're creating a large distribution where you have 2 peaks and 2 bottoms basically at this point, and it's been created since 2024. So what could this mean? Well, if you're bullish, it means it could be a bullish accumulation, but if you're bearish, this whole move is just considered a small sucker rally basically for a larger wave that may be pending to the downside. But right now we do have a little bit of evidence that's a little bit more clear than what Bitcoin could be giving us in terms of the overall story. So with that being said, the integrity of this ABC is still being utilized, and then we have this as a possible running variation going into the first wave W, meaning the running variation is wave B, and then we have an A and a C, that's the impulse in itself. And then this is the range here as a possible flat idea. Now, if you're not versed in the Elliott Wave Theory, a flat idea is a sequence where we create 2 corrective moves and 1 impulse move within a equilibrium state, which is why it's hence called a flat. And within a flat, the first move is going to be a 3-wave, an ABC that we have here. This second move is going to be an ABC as well. And then this last move has to be fitted as some kind of motive or impulse wave as a 5-wave move. And in this case, what I've done in the past few days is that I've counted this as best as I can, but here we can count a triangle for a wave B actually. And this move here with this corrective overlap that's happening right now in the past few weeks could be deemed as the diagonal in itself. Now, it's not the best looking diagonal, but if we're focusing on the macro structure, like I said, it's objectively quite clear that we may be working in some kind of distribution. So if we're taking some of the small market inefficiencies that we have on the micro time frames and we still have a valid, then the market inefficiencies become less prevalent and it becomes more prevalent on the macro time frame that this is going to be a distribution range as a 3-wave move. So we have an obvious distribution for a wave X, and that is our transitional wave, and we're now looking for another ABC to the upside that is going to be a partner like for this ABC that we created for a wave W. So what that means is it still gives us that swing possible opportunity to the upside as a bullish move, but it will be as an ABC. So This isn't set in stone just yet because the bearish scenario does still linger, and that also has a lot of merit in terms of we could be looking for another ABC to the downside as well. But for now, we can fit in what could be a bullish continuation to the upside as a possible flat idea that just completed. Now, if we zoom in and we talk about how this flat is created, like I said, the C wave is the diagonal itself. It's not the best looking diagonal, but it helps us remove any of the inefficiencies that may have happened here because this move here looked like a three-way move. So if that's a three-way move going into the first wave one of the diagonal, we have a 2, 3, 4, 5 that could be pretty much near complete, or we could be working for one more leg to the downside to extend the diagonal. But either way, we did hit a very important equilibrium 100% Fibonacci level when taking the Fibonacci extension of the origin of wave A to the termination point of wave A and to the termination of wave B. So that is how we're going to be looking at it. And right here, this is arguably an ABC because we have a leading diagonal going into wave A. We have a triangle for wave B and then a C wave impulse for that first wave A. We have an A, B, C. We have a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 going to a C. Again, an ABC going into the first diagonal, wave 1, 2, 3, 4, 5, and this fifth wave is still kind of pending. It looks like it could be complete, but we also could have another extension of that wave 5 as well. As long as it's shorter than this wave 3, it's going to be valid. So how are we going to begin looking at this as a bearish perspective? Now, this is going to be a very, very, it's going to break a lot of hearts, ladies and gentlemen, but it is still valid in terms of the bearish structure as well because Ethereum has just been a very lackluster rally. It was the most lackluster rally, let's just say, for this whole cryptocurrency market. I think a lot of people were expecting, including me, as a possible triangle where we had all the opportunities for a bullish move to the upside to continue for a final fifth wave to the upside, but that didn't happen. So that changes the whole bearish perspective and it upped the ante quite a bit for the bearish structure as well. So this whole move could be treated as a possible X wave, where this move here was going into the first wave W. Instead of extending that wave X as a flat idea, we have this now treated as either a WXYXZ. Again, the X wave placement could be, either here or here, where we're keeping the same integrity of the running variation. But again, this also does remove some of the market inefficiencies that we observed in the first scenario because this move here also looks like a three-way move in itself. So if that's the case, everything can be deemed as a corrective structure, and also that could be coming into that wave X as the completion of this entire bull run. So this bull run that we had in the past year or two for Ethereum alone, it's not a bull run. It's considered the bear market rally, a multi-year bear market rally, which is not uncommon in the cryptocurrency markets. Usually a lot of coins actually follow the pathway of Bitcoin and other altcoins, but Ethereum was really running on its own timeline. And more importantly, we did hit the 88.6% Fibonacci level, around the 90%. And I think a lot of people are going to start calling this a possible flat idea, but to me, it does overlap. I think that's where the Elliott Wave Theory falls short. I think there should be some real considerations for how an X wave can be terminated, but for me, I am seeing this as a double zigzag because this WXYXZ just fits better as an X wave that's terminated before the previous top. Usually when I work with flats, just like we have this flat here, I like to at least work within the 100% range. That's just me personally, but for now, this does look like a double zigzag where we may be looking for an ABC to the downside. It just shows better resolvement as a possible ABC to the downside. And again, the minimum expectation for that is going to be breaking this previous low of that 100% level of that Fibonacci if we're taking the Fibonacci extension of this origin of W, termination of W, and termination of X. That gives us that possible missing leg for the bearish structure that we may be looking for this similar type of ABC to the downside. So is that going to be fitting the same narrative as Bitcoin is still showing a little bit of unclarity because it may also be entering a bear market? This scenario is going to be for you. But again, we also have a little bit of market inefficiency being observed in real-time analysis that we're not seeing a clear impulsive move to the downside. So this diagonal that we also observed, could be actually be going into that wave 1, and we could be looking for a wave A right now. So this wave A could actually be here, and we could be looking for that ABC quite soon, and that B wave rally to the upside. That could be a fake out to a lot of people, where we don't go back and breach this previous high because we created a double top. So we do have two merits here, ladies and gentlemen. I'm just sharing you the two narrow down scenarios, in my opinion, on which way it could be playing out. Both have its merit, and both have its really both are pretty equal in probability. With that being said, because as a bull, you're seeing this as an accumulation before an actual breakout happens if you're a breakout trader. And then you have this, where this was a very sucker rally, basically the most abysmal rally that we had for, you know, the entire crypto markets. And it's going to hurt because a lot of meme coins rallied, and a lot of these high chip coins, you know, outside of XRP, it's just really sad to see that XRP or Ethereum didn't get that major rally, only a 300% rally. I mean, it's still a considerable rally, but you know, I wouldn't have been able to sleep if I was holding Ethereum personally. But yeah, everything is considered opportunity in the end, ladies and gentlemen. If we do reach these levels around the 3-digit, it's just all going to be opportunity, because I think Ethereum is not going to be going anywhere. If anything, it should be giving us way more opportunity to be building Ethereum in the future if it does happen to go down. But again, there is one window of opportunity, in my opinion, that this could be missing one more leg to the upside, where we thought that this was a triangle and working for a fifth wave to the upside. It's now going to be a corrective rally to the upside, where we may reach that 5-digit level again. So hopefully that was helpful, ladies and gentlemen. If you're interested in joining the Discord membership, where you get more in-depth, shorter time frame updates, more timely updates for Bitcoin, the link is in the description below. So please feel free to reach out to me, and don't hesitate to reach out to me. The link for Patreon is also in the description below, where I do 2 video updates in there as well. Hopefully that was helpful. Thank you very much. I'll see you guys in the next video. Thank you.